So MetaPlanet went nuts today. We talked about that. I still haven't bought any. I have all my money in Bitcoin, guys. I'm going to have to sell and get in. I don't know. Maybe I should start putting some fiat aside now that these LBEs exist and try to take some upside. But I've always been of the mind of, I don't want to leverage Bitcoin. I want to expose to that. I just want to own the asset. So you guys are starting to dip your toe into these LBE stocks and they're running hard. MetaPlanet was up what? I don't even know. It felt like 1,000% or something this week.
Yeah. It went up 108% in a single day. And the issue is that there's not a lot of shares outstanding. This is my understanding of it. I'm not claiming to be an expert on MetaPlanet. My understanding is there's not a lot of shares available. The float is pretty small. In Japan, it's been gapping up and hitting limits every single day. And then it trades. I guess it goes to Germany and then it comes to the US. And in each case, it's just kind of ramping it higher and higher. There's a gigantic short position. I think it's the most highly traded and most shorted stock. I think it's number 4 most highly traded stock in Japan today. And it's the most shorted of the entire securities complex in Japan. So it just creates a very interesting environment. And it's been extremely volatile, 108% up in a single day and then right back down. Totally. That's pretty interesting.
Maybe it would help if we talk a little bit about some of the things you need to consider if you're going to participate in these public companies that are pulling off the LBE playbook. And some differences between owning spot Bitcoin. There's obviously a lot of opportunity here when you look and see what these stocks are doing. You guys are talking about MetaPlanet and how much it's moved up in the past few days, but then you also have to look, I think it's down roughly 50% since the high yesterday, something like that. So this is one thing you have to keep in mind, is that these are likely going to be more volatile than Bitcoin. So your entry points on these stocks matter tremendously. Your entry point on Bitcoin does matter, but I would argue your entry point on these LBE stocks matters a ton more. Yeah. Alex talked about spot Bitcoin. One of the things he mentioned, self-sovereignty, owning your own keys, like all this stuff. That obviously you have that with spot Bitcoin, permissionless, you can cross a border with it. No one can tell you when and where to use it. All that great stuff does not apply to your MetaPlanet or MicroStrategy shares, to state the obvious. Number 2, you have to remember number 3, these are companies. There's a CEO, there's a management team. They're executing this strategy. Some of them might do it more prudently than others. Some might be a little risky with it. There's key man risk. What if something happens to one of these big figureheads? Does that cause the stock to sell off? That's another item you have to consider, that you're not taking that risk when you buy spot Bitcoin. Number 4, you have to remember, again, these are companies. They have some sort of legacy business, or even if they don't, they're still a company. And they could get into some sort of legal situation. This has happened with some companies where they might find themselves in a DOJ investigation for some sort of reason, and that could weigh on the stock. And it's really hard for you to predict if that happens. There's a lot of opportunity here. This definitely is one of the hottest topics in the Bitcoin world, but you just have to remember the risks you're taking when you participate in these individual company investments, and the risks you're not taking and not having to worry about when you just buy spot Bitcoin.
Yeah. Totally right on the money. These assets participate in a similar long thesis. The price of Bitcoin goes up, and they both benefit from that in similar ways, but they have very different risks as far as your downside. And that's the thing to be aware of, right? So it's like, as long as Bitcoin's going up, like Bitcoin will do well. And these companies, unless there's a major blunder, will generally do well. But the question is, like John said, there are management decisions, there's leverage, there's individual positioning, and these could all add additional risk in material ways that you don't have with Bitcoin. But also, I think something you said, John, I really liked, your entry price probably matters a lot more. They are much higher volatility. And if it's like on some of these assets, as they rallied up, if you bought the top on SEP or some of these plays, like, I mean, you were materially underwater for a little bit, like 50% or more. Now, if you held, you did okay. You did fine because Bitcoin kept rallying and we're early, in my opinion, in this. But it's still realizing that timing the entry wrong could have you go through some really material volatility, and you have to be prepared for that. And it's a reason, like, I don't think that Bitcoin should be your core holding. It should be your core positioning. You should hold mostly Bitcoin. And then if you want to go out on that risk curve, I think these are compelling and interesting stories. I own some. I participated in MicroStrategy. I bought the MetaPlanet dip today. I own a few other names. And that's been great. They've done very well. But you need to understand what it is you own. And I think there's a lot of people that have just gone all in, or just like, MicroStrategy was lagging, so they rotated all over to whatever was doing the best, and then that dropped. And like, you have to be careful. You need to know what you're doing. It's not as easy as just like buying Bitcoin.
I think the same principles apply as buying. It's buy and hold, right? Because it's all underlaid by Bitcoin and the Bitcoin price movement. So if you're gonna, let's say you got 80% Bitcoin, you want to do an 80-20 portfolio, coin portfolio, and you invest in what you think is the team, or are the teams at an LBE company who best manage that strategy. And Saylor calls it intelligent leverage. And that actually does matter. Like, it is the execution of the management team matters. So you might want to pick the team that you like and maybe put 10, 20% of your portfolio into them and try to capture some of that upside, but have the same mindset, right? This is a 5-10 year play, right? It's a long-term investment. If you try to trade them the same way as trying to trade Bitcoin, you're going to get wrecked. For the vast majority of us would get wrecked.
Okay, so I'm going to add one last comment to that. Yes, buy and hold, but also, in my opinion, you need to watch this stuff very carefully. The difference between Bitcoin and stuff like this, in my opinion, is I feel confident in buying Bitcoin and just forgetting about it for years and years, because the system is extremely stable, it's extremely decentralized, and I'm not worried that anything is going to happen to it. There's a lot more risk in something like this because there's management, there's changes in regulation, there's changes in markets. Do you understand the core business of that particular company? Is their core business good? Do they cash flow? Are they able to pay their bills? Those kinds of things. Because if they can't, then at some point they may have to sell some Bitcoin, right? So those are all things to keep in mind. And then the last thing I'm going to say about that is, if you don't have a core position in BTC, maybe don't YOLO into this stuff, right? You need to maybe consider building up a core position, a foundation, if you will, for your wealth, and then start looking at other things.
Yeah.
I'll just put some numbers around it real quick. If you chased, there's this concept of chasing an investment that's appreciating. If you chased MetaPlanet and bought the top yesterday, I see it hit $15 at some point yesterday. It's now below 7.5. It's below 7 on my screen. If you bought the top, you chased, you're down 50% in 24 hours.
It's going to hurt.
If you bought the top and you chased Bitcoin yesterday, you're down like 2.5%. So, that, I think that just speaks volumes right there.
I do think it's important to note that there is utility here, right? This is not just a shitcoin trying to grift off the back of Bitcoin. These are novel financial instruments that the MicroStrategy is building out, that provide real utility to people, right? Or to companies or institutions. And it's a way to move fiat into a Bitcoin-based financial system. So this is, there's risk here, but it's not like without substance, right? These are meaningful and useful investment tools, basically. And I think that's important to note.
Yeah, and I think just pulling back to maybe some of the theory or the view behind what's happening. We're living through the financialization of Bitcoin in many ways. That is what is happening. And I think the most important thing is that this was inevitable. If Bitcoin was going to succeed as the hardest money, as the best asset, then of course it's going to be financialized. Of course, there's going to be corporations that realize what it could do for them. Of course, these things are going to happen. So this is inevitable. This is just the trajectory of Bitcoin's monetization, what that looks like, where it's going through. Yeah. And there's been 2 phases to this market. I think there will be more. I don't think we know where it's going. The first phase was struggling companies. You had companies that were basically not doing well, that were never going to do well. Obviously, MicroStrategy had cash flow. It wasn't like a terrible business or anything, but it wasn't going to grow in a massive way. It wasn't going to have 10x earnings growth. MetaPlanet, they had half a hotel or whatever it is in Japan, right? It's similar. These were companies that were not in a strong financial situation, and they adopted Bitcoin to save the business and to grow. And that was enormously successful. And all of these companies that did it grew massively. We're now moving into, I think, the second phase of this market, which is where you see very well capitalized players who are not struggling businesses, SoftBank, Tether, Strive, all of these companies coming in and that are able to access billions of dollars of capital easily, relatively easily. And they're now coming into this market. That's a sea change. That's a notable shift. That liquidity has not hit the price yet. Those buys have not happened yet. There's optimism around them for sure, but those buys haven't happened, and there are more of them coming. I think you'll continue to see announcements over the next week, 2 weeks, etc., of notable large players. And like, this is the theme to watch in many ways, and it's a different stage. Now, will there be a third stage? I'm sure. I don't think we're through this at all. Could there be very highly levered players? Could there be players that take risky debt by the end of it? Could there be all of these things? Like, yeah, this is all possible. And you need to be very alert in watching this sector versus just buying Bitcoin. But it's a natural development. In many ways, it's an exciting development. And in many ways, I think it even solves the problem of, I think it capitalizes the Bitcoin industry for decades to come.
Let's take a look at a little data here on this front. John, you want to take us through this one?
Yeah, 100%. So this was a piece, I think it was UTXO Management plus Bitwise did this piece on institutional flows that could come into Bitcoin. And they took an interesting time period. It's basically 18 months. It's from now until the end of 2026. And anyone who's watching this either live or on replay, you'll see the chart. But for audio people who are just listening or do the podcast, they have 4 to 5 different categories here: nation states, wealth management platforms, public companies, US states, and sovereign wealth funds. And they estimate the inflows in US dollars over the next 18 months that they believe could or would flow into Bitcoin. The total, and the order I listed is their order for how big they expect each of those to be. The total is nearly $500 billion. It's about $425 billion. And they give an estimated BTC allocation. This, of course, has to have some sort of assumption of what the price is going to do over the next 18 months, because you have to assume how much are they buying, and you have to therefore assume at what price. They believe these entities are going to acquire 4.2 million Bitcoin, which is about 20% of the supply. So yeah, big numbers. One thing I'll just throw out to the group, which I personally think would be interesting to discuss here, they have wealth management platforms in that graphic listed above the public companies running the MicroStrategy playbook. Personally, I think those should be reversed. Just to elaborate, the wealth management platforms that they mentioned, they gave an example and they say like Morgan Stanley Wealth Management, Goldman Sachs Wealth Management. Those are like private financial advisors for higher net worth individuals, really playing through ETFs, I think is how most of those advisors are going to recommend their clients get Bitcoin exposure. I don't personally see that segment being larger than the corporate adoption running the LBE MicroStrategy playbook. But what do you guys think?
I could see it. We have, I'll bring the graphic back up. Wealth management platforms above public companies. Obviously, they have access to massive amounts of capital. The public companies are spinning up pretty quickly. I think it really depends on the volume of new companies, and we've been talking about this for the last few weeks. Like, how much demand is there to satisfy? How many companies need to start running this playbook to satisfy the demand that's out there for these kinds of financial instruments? And how fast can they spin up? They're spinning up pretty fast, and they're big companies too, with massive amounts of capital. Already, of course, we have the legacy financial wealth management platforms. They have access to trillions of dollars already right now. So yeah, I could see that. I do think you're right though, John. The public companies should flip with the wealth management platforms, because I think they'll just move a lot slower.
So keep this up. I agree with you. So I think the sovereign wealth fund is comically low, and I think you've already seen over 50% of that like today. The idea that sovereign wealth funds are only going to do 7.8, we know for a fact Abu Dhabi has almost $1 billion in ETF already, and that doesn't include spot coins they have, which they almost certainly do. I've had this confirmed a number of times. So I think that number is like very low. I think it's surprisingly low, and I think people will be surprised by actually a pretty robust involvement there. US states is a question mark for me. I know we're actually getting the Texas signed, I think today, and that should be the first like really real one, in my opinion.
That's a big one.
It's a big one. It's a
second
big one.
the second largest economy in the country, behind California, I think.
Yeah, and I think they will actually buy. I think because the thing is, the New Hampshire one, I know they got it through, but I'm not really so sure on like, well, how much buying are they really going to do? I don't know. Texas, I could see though. So that's interesting. I don't really have an opinion on that number. I haven't looked into it too much. Public companies, it's actually cool to see that because I've been having calls with my clients and hosting roundtables and saying, I said, I think you could see 100 billion but I've said that not including MicroStrategy. So I actually think you could see 100 billion, 70 to 100 billion from companies not including strategy. And I think you could see 50 from strategy or 30 to 50. Yeah. So that's a little bit low, but that's also where my head's been at. The wealth management platforms, I agree with John. It's funny. What are we really talking about there? Like we're talking about high net worth people buying. Makes sense.
Yeah. So in that area, the wealth management platforms, you've basically got two ends of the barbell. You've got like high net worth. These are people that are like maybe $1 million, $1.5 million, and upwards of a couple of million in terms of net worth. They're not really in the market at all right now. If we look at who's selling and who's buying, it's actually retail and individuals that are selling, and it's institutions that are buying.
Totally.
And the overall sentiment right now is not that great. The search traffic on Google, for example, on a scale of 1 to 100 for people who are looking it up, Bitcoin right now is pretty low. It's around 25. And until that shifts, until you see retail moving in a much bigger way, I don't know how exciting that's going to be. But when it does shift, you could see pretty substantial. I think I agree with John. This will all be ETF action. That doesn't necessarily mean it's going to be spot Bitcoin. And then on the other end of the barbell, you've got much wealthier families, family offices, and you're getting into the tens of millions and up. Again, when they start to see things like sovereign wealth funds and larger institutional capital move, I think you're going to see a lot of action there as well over time.
Yeah. And just to elaborate on my thought of flipping those two categories, I just feel like we've seen so much adoption already from the public companies, with MicroStrategy leading the way, companies announcing billion-dollar plans, tens of billions of dollar plans. Like we're just like we're still early, all things considered, but like we're much further along that trend than we are your run-of-the-mill Goldman or Morgan Stanley wealth advisor saying, yeah, you got to have 5 or 10% of your portfolio. That just hasn't happened yet.
They're going to be slower. Yeah.
That's right. That's right. And that speaks to Alex's point a little bit of this discrepancy between the institutional excitement and adoption and market and the kind of high net worth retail, etc. This really has been the first cycle where this phase of the cycle, I think it's almost all institutional money coming in versus retail money, even if we're talking like relatively wealthy retail, because that comes into your advisor market, your Goldman, Morgan, RIA market. Those people they're warming up, they're waking up. I'm having some calls, but they have not been in the driver's seat these last 6 months.
Check out BTC in DC in the fall at btcindc.com. That's going to be held at the Kennedy Center, the historic Kennedy Center in Washington, D.C., right next to the Watergate, the historic, infamous Watergate Hotel. It's going to be a really, really cool vibe there. Something that we haven't seen before in the Bitcoin conference circuit. And it's a great time, a really important time to try to have an impact and be part of the discussion around Bitcoin and public policy. So we hope to see you there.